On today's show, we take to the skies with Air Canada. So grab yourself a brew and we will start right now. In 2019, before the current worldwide illness, the airline industry was at record profit of $607 billion, which is a record high at the time. But then we entered 2020 and some initial restrictions were dropping in place to prevent the spread of the new illness. These restrictions, in the form of flight bans, was enough to reduce the overall profits down to 581 billion, which is roughly a drop of 9% off the all-time high. We all know the illness continued to spread and was then given official status by the World Health Organization. This had a massive negative impact as flight restrictions clamped down, and as a result, those worldwide airline profits plunged down to $189 billion. We were now a whopping 69% down from the 2019 revenue. Holy banana bread, that's a lot. By 2021, the illness still lingered with new flavors every few months or so, but a small recovery was still in the works for the airline industry. Worldwide revenue grew to $227 billion, which was a little better, being down 63% compared to the 69% of 2020. If we look to 2022, it is predicted that we will see more recovery in the air industry, and it's expected to reach 378 billion, which would only have us down about 38% compared to 2019. If that trend were to continue into 2023, the outlook will be even better, and there could be a chance of recovering most of what was lost due to the illness. Now, if we focus on Air Canada, in 2019, the share price peaked at $51.07. And then, as the illness took the world into a frenzy, that price bottomed out at $14.50. I totally wish I bought in on that day. When the world lost 69% of the overall airline revenue, Air Canada's price fell by 72%, which is not far off the mark to the total lost revenue. It was a little concerning at the time, as Air Canada did fare a tiny bit worse than the worldwide average for, of course, the airline industry. However, in 2021, Air Canada had a small yet healthy rebound to $27.86 per share. If we compare that to our worldwide revenue, we get Air Canada being down from their 2019 numbers by 45%, while the worldwide revenue was down 63%. This is very interesting because what it is showing is that Air Canada moved from below the average to well above that average in regard to how fast they are recovering. Now, if we fast forward to 2022 and the expected worldwide airline revenue recovery is predicted to be within 38% of its 2019 numbers, this may bode very well if Air Canada stays above the average. If we take a more conservative projection and project Air Canada's numbers based on her falling back in line with the worldwide average, this would mean a potential share price of $33.20 within 2022. So if you bought 100 shares at $23.05 for $2,305, by the end of the year, you could potentially see them worth, well, $3,320 for a profit of $10.15 per share, or $1,015 if you had bought those 100 shares. However, Air Canada has been doing better than average, and thus we have a best case scenario of a share price of $43.46 in 2022. That would be a profit of $20.41 per share, or if we had 100 shares, that would be $2,041, which is almost doubling our investment. That is not too shabby, if you ask me. Hold on, though. Before you run out and start buying up all the Air Canada stock, we need to do some more due diligence. First, this seems like a good time to point out that I am not a financial advisor, and this analysis is for educational and entertainment purposes only. I am the start of your research. A financial advisor is the end. Okay, so the numbers and the pure math are looking fantastic for Air Canada. However, numbers can be easily skewed by the real world. These numbers are making some assumptions. They are assuming that the new variations of the illness are getting less severe. That is probably going to be the case, but there is always a chance that a new variation could get worse, and that would scale back the math to some lower numbers. So that sounds pretty bad if that happened, but the good news is, if that did indeed happen, Air Canada should be able to weather it. In November of 2021, Air Canada withdrew from receiving any further financial support from the Government of Canada. They stated they had improved their liquidity, thus providing them more of a buffer against further flight restrictions. In addition to this, we all know that the government will never allow Air Canada to fail. If anything, a worst case scenario would only delay your return on investment. If you are looking to make money on Air Canada, there will be opportunities for most investment strategies. The long term investor is mostly concerned with when is the right time to get back in. The math we looked at earlier supports that it may be now. If the illness continues to become less of a concern, then you are more than likely not going to see any further big drops. Even if we were to move into a bear market, it is hard to imagine the price dropping much more than it already is. You also have to keep in mind that when international travel really opens up again, there are a lot of people who will be flying. Vacation spots will be booming. That alone will push the price upward. Like I said earlier, still do your own research and consult your financial advisor. However, with that being said, things are looking really good for Air Canada and the long term investor. I will not tell you what I plan to do here, but I will say that I do like the math a lot. Let's talk a little bit about swing trading. There are opportunities, but they are not going to make you a lot of money without bigger investments. For example, the current channel Air Canada is in at the time of filming is in an ascending channel. This is on the 4-hour chart, and each swing on this channel covers a $1.23 range. If you play it safe, you would be looking at making $1.04 per share per swing. So far, two swings in, the first low to high took 5 days, while the second took less than a day. So if you bought 100 shares at 21.73, you would pay 2,173 for them and then be selling them at 22.77 for 2,277 and only making $104. This is a trade I would probably pass on, as there will be better opportunities out there to gain a better net swing. Keep in mind, it is also in an upward channel, so as long as that remains valid, you can always leave your trade in for a double or even a triple swing. You will make a little less, but it is lower maintenance, and all you really need to do is check in every so often to make sure that the channel is being respected. And it never hurts to add a stop loss just in case you get a price reversal. The final verdict, as things stand right now, is that Air Canada could be a good opportunity for long term investors. There more than likely will be a substantial growth in 2022 and 2023, which will result in a respectable return on your investment. In fact, if the math plays out right, this would be an ideal stock to place in your TFSA and let it grow your overall room within. As for swing trading, there will be opportunities and more than likely better channels with better returns for your time. If you are looking to do longer swing trades, look for channels on the longer time frames. The 1-day chart, for example, is excellent for finding swings with time durations of multiple days all the way up to a month or even a little more. If you like this sort of content, then definitely please fly on down and land on that like button. Then you can shuttle over to the subscribe and hit that notification bell with a little turbulence so you know when I post a new video. If you are looking to support what I do, I just started a Patreon for this channel where I will drop some exclusive content and let you guys determine the last video of every month. Thank you all for watching today. And with that, I bid you a fond adieu.